Hello there and welcome to all of you automated investors out there, and a happy new year to all of you. I just thought I would make a quick yearly update as to how 2021 did for our different models. As you know, if you have visited our site before, we have 3 stock models. There's a weekly momentum, monthly and a quarterly momentum here. And there also the ETF strategy we have had so far. And now the ultimate dual momentum is added. If you haven't seen that, we have made a couple of videos about that on the YouTube channel. So have a look at them if you want to see how that is built and constructed. So let's have a look at these different models. We start with the weekly momentum. As you can see, CAGR of 29.44%, max drawdown of 19%. And as you know, if you have followed us, the equity line here have been somewhat choppy lately, and if we are taking a look at the overall market here, the S&P 500, it has been a tough autumn here for many trend following models, since we have gone up, down, up, down, up, down, up, and so on. And that is not the favorite, especially of a model that trades every week like this one. That is one of the reasons why I'm using personally a bit longer term models, because the weekly momentum is something that doesn't give the stocks a lot of room to breathe. So, but a year to date, around 30.5. I know the CAGR shows a bit of different, but that should be corrected today when we get the new data here. We have a sharp above 1, which is great. We have had quite a lot of volatility, a bit more than normal, but that is how it goes some years. But you can see we have more winners than losers, and the average winner is definitely a lot larger than the losers. 1.3 in risk to reward, so that is great. So that is the weekly momentum, about 30% for the year. That's absolutely satisfying. Let's go to the monthly momentum. That shows somewhat lower, 22.8 here. Let's dive into the graph and see how it does here. And again, we see this choppy picture with a bit of a tough run this spring, with a lot of ups and downs. Now, looking at 1 year, this can look a bit dramatic, but if we look at the results back from 2008, we can see that yes, there was some chop here. Let me just see. This is actually only for 2020, so we can't see the 2021 here. But it's just to say that overall, looking at the long distance, there have also been choppy markets at other points in time. But overall, when we look at it in 13, 14 years charts here, it isn't actually that bad. But when we look at it here, we can see that 23% for the year of 2021. That is decent, but actually both the weekly and the quarterly are better. We can see that we have 60% winners, 40% losers, and again we have a risk to reward at 1.4, so that is not that bad. The last of the stock models, which is my personal favorite, especially because there are lower trading costs and you don't have to sit in front of your computer all the time. You have to trade once each quarter. That's made 27%. It is at a sharp around 1, Sortino 1.45, which is great. A bit of a lower max drawdown than the weekly. Let's have a look in here. And we can see again some chops, but again almost 30% for the year. That's definitely not bad. We can see that we have 53% winners, but the risk to reward is definitely a lot higher than in the other 2 models. It's almost 2, and that is of course because we let the stocks run a bit longer, so they have more time to actually gain this momentum that we are making money on. So a 54% winners here, a win rate, is definitely fantastic if you can have a risk to reward around 2. So these are the stock strategies. Then of course there is the ETF strategy. The reason why this one has, if we take a look at the infos here, you can see that the year to date is around 10 and the CAGR is 13.4, is that this one was only activated in April, so we haven't got the first quarter in the stats for the year to date. But again, it seems also very choppy, but as you can see, the max drawdown is only 6.5%. We can also see that in the chart down here, the drawdown chart, and that is definitely a slow and steady earner, this one. It has in the history in our test, it has made around 17% on average per year. So this year with a CAGR of 13.4 is not quite up to par, but it is definitely okay. 76% winners and a risk to reward below 1, but that doesn't matter too much when you have such a high win rate here, then that is definitely also okay. Now, then there is the last strategy, and of course we don't really have any stats on that because we just started it, but over the next weeks and month we will start to add some stats to that, and it will be interesting to see how that performs. As you can see here, if you are a member or a trial member, there's a 30-day free trial. You can see that there are check marks here, meaning that you will have to make changes today, also on the monthly and the quarterly, since we are going into both a new month and a new quarter, so there will be some changes here. By the way, below down here you can also see that we have started to adding research strategies, and this is the dual momentum, the original global equity momentum here by Antonacci, the one that we have made videos about. And just as a reference point, we are putting these research strategies down here so that you can see how are these well-established strategies doing, and then we take the enhanced versions that we are making, and of course we can compare them to see if our models can do it better than the original ones. So that's all. We are looking forward to a very active 2022 here. And we are planning to add more models here, and we are planning to do more research so that we can make some more educated choices when it comes to our investments in automated strategies. That's all for now. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye.